Hi guys, welcome to another honeystocks.com garden edition of the weekend analysis, which I think is going to be going out on the 12th of April. Now, the market has obviously had quite a large swing to the upside over the last couple of weeks. I think the one thing that's evident is the charts, the price, the indices, the stocks. Everything's factored into the prices of the market. Now, before I get into the charts, which is obviously one of the reasons why everybody follows the channel, I want to really just kind of touch on a couple of things that we've seen in the past. Now, I'm not saying that because it's happened in the past that it's going to happen in the future, but what the past does help us to understand is it has a precedent. Now, there's obviously been a huge retracement of price over the last couple of weeks. I'm getting a lot of questions asking, am I bullish, am I bearish in the market? Hopefully, once we get into the charts this week and we start to kind of digest all the information that's being presented to us, hopefully you've got a little bit more clarity by the end of this video. I think the video itself, I think there's about 20 individual stocks. I think there's about 6 or 7 charts where I'm talking about the overall market as well. So hopefully you get a bit of value from this. As always, if you don't make it to the end of today's video, please do stick to social distancing. It is making a difference, and stay safe out there. So let's dive into the charts and let's see what the market's telling us this week. As always, guys, before watching a second more, please do pause the video. Make sure you're comfortable with that before watching any further. Just basically says that there's not any investment advice, and any of the information presented is just information. Do not act upon a single word I say. For those of you that are new to the channel, technical analysis is what I'm widely known for. I'm registered with the CMT Association. I'm working my way towards my chartered status at the moment, and technical analysis is something that I'm widely known for. If you do get some value from this, do please subscribe to our channel. Bottom right hand corner there should be a little subscribe button, bell notification, all the good stuff. It all helps with the YouTube algorithms if you give it a thumbs up. So the charts, guys. So I think where I really want to just kind of touch on for the first couple of minutes before I get into the individual stocks is to talk about the overall market and what exactly we're seeing at the moment now. I think that the first thing that we really, I think probably most of us already understand this anyway, is that the severity of the financial crash that we've seen. Now, this is on a par with the financial crisis, the crash of 87. Now, the chart that you're currently looking at is the percentage of stocks that are trading above their 200 period simple moving average. Now, this is a pretty useful breadth indicator, and it really just starts to kind of give us an idea of when the market has potentially found a bottom and when we can maybe look to start initiating buy positions in the market. Now, I don't think we're quite there yet. I think there is still a chance that we fall away, but as we can clearly see, when the percentage of stocks starts to kind of get up around 15 to 20%, which is what this is a percentage of stocks, 17.66% at the moment. When we're in this range of 15 to 20%, we can clearly see what happens once we start to kind of move out of this area. The market really starts to rally. Now, what we've obviously seen so far in the market, we know that tech has obviously held up very, very well. It's been a kind of flight to safety, if you like. Now, if we are looking to benchmark against the S&P 500, we want to be in areas of outperformance. Now, what that essentially means is by looking at the triple Qs, which is a tech area of the market, we want to have a bit of exposure to tech. Whereas if you are looking to outperform the market, retail probably isn't the place that you want to be. Now, I do understand to the other end of that over the course of the last 10 days, all areas of the market have rallied hard. You'll have areas of retail that have rallied hard as well. But when we start to kind of assess the market and we're looking at whether we've found the market bottom or whether we've not, the question that we're all kind of asking ourselves at the moment is, are we seeing the V-shaped recovery in the market, or are we going to fall away? Now, the thing that most of you, I would hope, would have would be a game plan. Okay, the game plan, a plan of action, whatever you want to call it, is something that you absolutely need to have in place in order to navigate the markets. Now, a lot of you watching this video will have bought the dip because buying the dip has worked for you. It's worked in the past. You'll be continuing to do it, and it'll be working out well. However, when we observe the technicals in the market, we have to observe the key levels. Now, for those of you that have followed the channel for quite some time, will already understand the importance of the 200-week simple moving average. We are at this level as we speak. Now, we also have this level here, which I'm going to show you just how important it is in a second, the 50% retracement level of this whole decline. Now, one of two things could happen here. We could just blast off into the sunset and the market continues to rip higher. We all continue to make lots of money to the upside. Or this is going to be a logical level where the market starts to decline again and we come back down and potentially look to retest the lows that we've seen last month. Now, I'm open to both scenarios. I think what you probably need to understand is, you could look to buy positions here, but if we get an outright rejection of this level, that's where the game plan, in my opinion, has to come in. You don't want to lose all your profits that you've made over the last couple of weeks. That would just be silly. So it might be a case that you might want to start consider, tightening up your stop losses if you're playing the technical game. Obviously, the value investing side of things, the dollar cost averaging, etc. I'm not going to get into that, but it's a very, very key level in the market, and this is why. Now, I'm not saying that this is going to happen, but what technical analysis allows us to do is observe history and price behavior. Now, a lot of you, because of the size of the move that we've had over the last 10 days or so, will be convinced that we found the market bottom. But what if I presented to you and showed you that 50% retracements in bear markets are commonplace? Now, I'm going all the way back to 1929 here with the Great Depression. Now, again, I know the market is completely different from 1929. I'm not saying that it's a true comparison by any means, but what I'm wanting to highlight here is that these retracements, so if we think about the retracement of the very first decline in 1929, we retraced 50% of that move. With move 2, we retraced 38%. So we actually had 50% retracements where everybody thinks we found the market bottom, but then the market just continues to keep tanking and keep going lower. So, like I said, because we know it's happened in the past, it can happen in the future. It's not out of the realms of possibility. So it would make a lot of sense to me that you would want to start to observe the major indices. It's not necessarily about your individual stocks. I think a lot of us understand the gravity of the situation, the economic impact around the world, COVID-19, whatever your beliefs are. If you're looking to profit in the stock market, I think you need to get into the habit of filtering out a lot of the news and just focusing on price, because price will tell you what's going on in the news. I know that will sound counterintuitive to many of you watching, but it absolutely holds weight. It's amazing how negativity comes out at key market resistance, support levels, etc. So those are my thoughts on obviously the wider market. We obviously know that the S&P 500, we have now blasted through the 200-week simple moving average, but again, we're at the 50% retracement. The S&P 500, the Dow, obviously heavily correlated. So I'm going to be watching these levels with a lot of interest, obviously at the market open on Monday. Now, again, it just comes down to the game plan. A lot of the charts that I'm going to be walking you through today are opportunities to the upside. There are a lot of charts that you could make the case that they could go up or they could go down based on the key technical levels. So again, just get your game plans together, manage your risk appropriately. I can't emphasize that enough. Tech, obviously long-term structural uptrend. I've highlighted this chart for what feels like the last few months. And again, I think you can still continue to be bullish on tech, obviously the tech leaders, etc. A few of them I'm going to be going through today. But we're going to start off this week with a buy opportunity with gold. I know gold doesn't get a lot of love because it's not one of those quick momentum stocks or quick momentum areas of the market. But gold has actually risen around 17%. And for those of you that again have been following the channel for a while, I highlighted this as a key support level where I thought the smart money would step in and look to buy. That's exactly what's happened. And we've had a 17-18% move to the upside. Now, for those of you that maybe didn't allocate any risk to gold, there is an opportunity. I think we might be looking at a breakout above 1700. I think when we look at gold around the world in the various currencies, that they've all broken out. I don't see why the US dollar wouldn't break out as well. So I think that would be a key level of interest for me. I'm going to be watching this one on Monday to see where we go. Now, Amazon's obviously a big one. Now, I highlighted Amazon last week actually, just because we were below this trend line. I highlighted it as a potential breakout candidate. Now, we've had the breakout. It started to obviously move to the upside, but what's actually telling for me isn't actually the daily chart, it's actually the weekly chart. And given that we've now broken out above the $2,000 limit area, again, the next logical target for Amazon is actually way up at around $3,000. So I think you can continue to be bullish on Amazon. I think if you're out there, it's not done a lot over the last couple of years. I think most of you that have held for quite some time will probably understand that already, but it does look like we might potentially be looking to take the next leg higher. And if that's the case, you would expect Amazon, provided the earnings, etc., are quite solid, which I think is the big concern at the moment as well. Obviously, we've got earnings season upon us. How is the market going to react to guidance being removed, to poor earnings, etc.? The answer is nobody knows. So I would just, massively advocate getting a plan of action in place and, just sticking to your well thought out plan. Netflix, I think, makes a lot of sense above $400. Again, I've been patiently waiting for this one for the last few weeks. It's slowly getting up there now. Starbucks, quite a few of you reached out to me this week asking about the rally in Starbucks. I think this is really how I see it. I would really want to see this level cleared. We can clearly see that it's a previous support resistance level. I'd like to see that clear, and I would also like to see the 50 period simple moving average clear as well, and I would fully expect that one to start to move off and start to test $90 and hopefully and beyond. Nobody likes a rising stock market more than I, so hopefully the market continues to rally hard. We have Apple. Again, looks like we've obviously had a period of consolidation. It's been chopping about sideways for the last 6 weeks, but it does look like now we've had a breakout with conviction above the 38.2% retracement level of this move. So I think it makes a lot of sense. I think you can continue to be bullish on Apple. I don't think I'm going to break the internet by announcing a bullish thesis on Apple, but there we are. Now, for disclosure, on Friday I initiated a position in Twilio on this breakout. Now, because I'm quite risk adverse, I think the other thing to say is that it's not my traditional style of trading. I was hoping that Twilio would advance a lot more than the 5-6% that it did, because I'm not comfortable with gap risk, and obviously with we're at the mercy of many news headlines, etc. We're at a key area of support resistance. I made the decision to remove my position, bank the profit, but we have broken out. So I'm going to be watching this one Monday, Tuesday, see how the market reacts, and potentially look to get back in again. But price looks like it's breaking out, so I'm not going to fight price. AYX, very similar looking chart. This gapped up actually $10, $11 on Friday because I actually wanted to take this one over Twilio, but Twilio offered the opportunity to get in, and I don't like to chase entries either. So we've broken out. So I'm just going to be watching this one now, and looking for the 200 simple moving average to clear before potentially looking to initiate. And I think there's a good bit of upside potential there. Disney, very, very similar, break out of a descending trend line. Now, there's obviously big news with Disney regarding the subscriptions, etc., that have come out. But again, I'm just kind of waiting to get what I would deem the optimal entry. I think it makes a lot of sense for me just to kind of see this level clear at $107. It's not any surprise whatsoever to me that we got a bit of resistance here. This is a chart that I went back and forth with a few of our subscribers on at the end of the week there, and the message is above $107, and I think I would look to probably buy Disney. Shopify, very clear triangle pattern in my opinion, descending trend line, whatever you want to call it, but we can see that it has a lot of merit, a lot of weight. So I think if you're looking to buy Shopify, I think it makes a lot of sense to just wait for a breakout here. In a declining market, if we do get a rejection in the major indices, then it would be a problem if we start to decline. So like I said, it's just about using a little bit of common sense. I think you want to see these trend lines break before moving back in. Roku, I like above $100. Again, very, very similar actually to the chart for Disney. We're just looking for a breakout above these key levels before looking to initiate. Now, I think I've run out of email space for the airline requests. Now, obviously, I think most of us understand that nobody's really getting on flights anymore, or at the moment, I should say. Now, how is that going to equate, 3 months down the line, 6 months down the line? I don't know. Nobody really has the answer for it. But I think what we have to understand is the market is pretty efficient at pricing things. Now, when we consider that we've had a massive drop with airlines over the last couple of months, it stands to reason that at some point there's a perceived value. I think that's kind of what we're seeing at the moment. I think we're seeing buyers step in because of the valuations that are on offer. But I think for airlines, I'm very, very neutral at the moment. That has been a shift of stance over the last couple of weeks. I've been outright bearish on airlines. I think given the support that we've seen, especially with Southwest Airlines here around $30, we're obviously way up at 35. It's actually not a massive move to the upside. Sorry, excuse me. But what we have seen recently is we obviously had that monster move with the 50% retracement before it's fallen away again. So it isn't a bit of a downtrend. I'm not saying that I would be bullish on airlines. I'm not saying I'd be bearish. I don't know would be the answer. But I think for me, if we get a breakdown below $30, I would outright short it. I wouldn't have any problems with that. But at the moment, I think it's very much a case of just waiting and seeing. United Rentals, again, those of you that follow closely will know that I did well on this one a couple of weeks ago with a short position. Again, I'm just kind of waiting to see what happens. It was no surprise that on Friday we got a rejection here at the 50% retracement, and it obviously fallen away $7, $8. So depending how the market reacts Monday, this is one of those where you could look to buy it if it breaks out above 114, but if it starts to fall away, again, this is probably a short candidate as well. Again, very, very neutral on United Rentals at the moment. I don't have a bias in either direction. It's really just a case of waiting to see what happens with the overall market. Zoom has found support. Looks like the 50 period simple moving average has held as support. This is one that a few of our subscribers and clients have bought already. So I think that would be a level to keep a very close eye on. I did mention last week that I thought it was a company that might suffer if we start to see the likes of Microsoft, etc., start to step into that game. I think there's been a few negative headlines with Zoom from what I understand, but price doesn't lie to us, and it's found support at the 50 period moving average, so I think you can continue to be bullish on Zoom at the moment. Shake Shack, again, I've been bearish on retail and restaurant businesses. I don't think, again, I'm breaking the internet with that thesis. So again, just waiting to see what happens here at these key levels here, the 200 period moving average. Are we going to get a rejection? If we get an outright rejection, I think we go back down and we potentially test the $30 level. So again, I'm watching this one on Monday, and that would be one that I'd be looking to add to a short on. Tesla, I think above $500, I think you can continue to be bullish. Again, my message has been pretty much over the last few weeks that this $500 level is key for the stock. It's kind of chopping about sideways. Because I'm asked about Tesla so often, I usually include it in the weekend analysis, but again, very difficult chart to read actually, that there's not any real optimal entries being offered here. I think if you break out above 588, maybe you might want to look to add or buy more stock, but again, it's one of those that you would need to plan out and obviously game plan. Now, McDonald's has gone against what my thesis on the kind of restaurant, fast food business, etc. Obviously, McDonald's is the granddaddy of them all. So we've obviously had a massive decline. We've now retraced to the 61%. So I think we can maybe say that the downtrend might potentially be over with McDonald's. Congrats to anybody that bought in, and obviously the valuation side of things. But again, I think we're looking to potentially break out above the 61.8. So, I think you've probably got to be a buyer of McDonald's, provided that it's above those levels. Financials obviously begin earnings season. They kick it off this week. So JP Morgan's one that I'm watching very, very closely. Obviously a massive decline. We've now broken back out above $100 and the 200 period weekly moving average. So I would hope to see JP Morgan start to advance from here. Microsoft continue to be bullish. It's one of those that has its fingers in many pies, if you like. Great company. It's obviously moving up through the levels. Congrats to anybody that did buy in down here around 130. But again, it does look like it's starting to move its way back to retest the highs of around 190 there. So, I'm going to be watching that one with a lot of interest. Micron Technology, again, it's hovering around. It has gone and tested the 61.8 retracement level. So we're looking for a breakout above that level, above $50. But again, you also want to see these levels hold true as well. You want to see it, the support level, sorry. It's the total mind blank there. We've got the 50% level here. So I think, you'd look to be bullish above this level. And I think a breakout above that level, and I think we probably see it start to go and retest those highs. Universal Display Corp, again, this is one that I was looking at a short actually below $100. I think, at some point, again, valuations kick in, and again, price doesn't lie, so I'm looking for a breakout here above this level, previous support, and I think we've got a good bit of upside potential here. One thing you've got to bear in mind though as well, guys, is that if you are going to be getting in early and you're looking to buy these discounts, you have to understand that there are going to be multiple areas of resistance for it to overcome in order to get back to its previous highs if the market continues to move to the upside, which I think for me at the moment is obviously still a big if. So I think with Universal Display Corp, I think that's the level to keep an eye on. AMD, again, I'd be looking at it as a buy above 51.50. I think if we're above that level, I think we probably go and test $60. Square Inc. is obviously had a bit of news this week. So I think this is the level again to keep a very close eye on. The candle there doesn't fill me with a lot of enthusiasm, but again, you know, if we get a breakout above $60 here, I think you could look to buy Square Inc. Visa, again, very similar here. It looks like we've broken out previous support level, previous resistance level. It does look like it's broke back above it. So I think you can probably be bullish on Visa, provided that we're above this 170 level. I think if we fall away, I don't think you would want to take any chances. But I think above 170, I think you can be bullish. Yeti, again, it's one of those that I think could go either way. So, you know, would I look to buy it here, or do I think there are better candidates out there? I think there's probably better candidates out there. But, you know, since I'm asked about it, I think this is a level to watch. And, you know, if we get a rejection, I'd happily short it as well. Zscaler looks like it might potentially break out here above $66, $67. It's obviously held up very well in the current market environment, so you know it's one of those that you might want to strongly consider. Again, Alibaba's doing nothing at the moment, guys. I'm asked about this every single week. There's nothing interesting about the stock. It's obviously a great company, long term, great hold, but technically it's not really doing much. It's you know, if you're watching this rally at the moment, you're only holding Alibaba. You're probably feeling like you're missing out a little bit. But again, it's a great company, but it's in the middle of no man's land at the moment for me. Again, same with CGC. I've highlighted this one the last couple of weeks. Structural downtrend at the moment. I think you can play it between these levels. That's the only kind of appeal that it has for me. Now, IQ has been a very interesting one this week, and it's really been interesting for the fact that obviously there's a big issue with a lot of the Chinese companies at the moment, and obviously Luckin Coffee is a big warning signal to, I think, many investors out there that have allocated a lot of risk to these Chinese companies. In saying that, we obviously had a key support level. Now it looks like we've potentially had a failed breakdown, and it looks like it's starting to move to the upside. So I think if you're out there and you've got IQ, I think you can continue to be bullish, but I would be very cautious with the position. We know that in the past, this 200 period simple moving average has been a very key level of resistance for the stock. So again, I'd be watching it just to see what happens here. If you're holding it, and well, actually I should say, hopefully you've not bought it, and hopefully you're not holding it from, you know, way here. This is actually a stock that myself and many of our clients and subscribers did very well on a couple of years ago. But you know, at some point we have to understand that we're only dating these stocks. You should never really get married to them. And I think we've had a failed breakdown, but I'd be watching this level with a lot of interest at the 200 period moving average, and you know, I'd be getting a game plan together. I think that's for certain. I think with PayPal, I think you can continue to be bullish above $100. It does look like it's kind of broken out here. Obviously 105 I think is another level of interest. So I think if you're above 100, above 105, I don't see any reason why this wouldn't go on and, you know, start to kind of move towards its previous highs. DocuSign again above $90 makes a lot of sense to me. The 161 extension level, so again that's a level of interest for me. Again, Boeing, just to kind of touch on this one very briefly, just going back to what I was saying about the airline stocks, I would firmly put Boeing in the same category actually. You know, the charts are almost identical to Southwest, and full 38.2 retracement, fallen away again. It's rallied a little bit again. The rallies are getting shallower. So I think if we're below 150 in Boeing, I think that would be an area where you might want to just consider tentatively maybe going short. Obviously it's a bailout candidate, big company, but again, I'm not really, you know, looking at the fundamentals of the company. I just see the stock price in a bit of distress. So, you know, that's what a technical analyst does. We assess price. We don't assess the variables of these made up valuations. Okta, again, key support level here. I think we're fast approaching the target level that I highlighted a couple of weeks ago. So I'd be watching this area here. I think if it starts to move another $10, again, I'd probably want to get a game plan in place, given that we know that this is a key level of resistance for the stock. Somebody was asking about Amarin. I've got it noted down somewhere, so I'm including it this week. We've got a key resistance level in the past. It looks like that resistance has turned into support. Would I be buying it? I think there's a bit of negativity around their product. But again, for those of you that are maybe looking at the valuations and risk to reward propositions, it looks like it's found a bit of support there. So, do with that information as you wish. And we also have Take-Two Interactive. Again, somebody was asking about this week. It does look like we've found support, and it looks like very, very similar to Okta. We're looking to just kind of get a game plan together, because we can clearly see that this is a massive level of interest for the stock, and it would be negligent to not have some sort of game plan together. Now, if you enjoyed that, please do subscribe to our channel. We try to upload every week, sometimes every couple of weeks, just depending on how much time I have to build these presentations, if you like. But if you are somebody out there that does struggle a little bit, maybe you want to get better at technical analysis, maybe you would like to have the benefit of a dedicated trading community, etc. We do a lot of really good things at honeystocks.com. Now, what we're doing at the moment, and I think it's why we're obviously getting so many sign-ups, is whenever we take on a new sign-up, we're giving away full access to our technical analysis program at the moment, which obviously, as you can see there, we do charge a lot of money for that. So we're doing that up until we reach our 200 membership limit. We've still got, I think, 18 spots left. So if you are somebody that would like to come on board and obviously learn technical analysis, we also provide a lot of other benefits. Now, I'll walk you through those in a second, but you get 1 year access to our trading ideas, our scans. I'll show you what that looks like. You would have 1 year access to our premium weekend charting analysis. You've got 1 year access to our trading community. We provide bespoke charting requests. So if you need a second opinion on a chart, we're happy to provide ours. And it costs $500 for an annual subscription. And it's, in my opinion, a bit of a no-brainer, but I'm sure you guys have all followed along long enough, and I'm sure you've got a fair idea of the style that we have at honeystocks.com. But this is a recent trade alert that we sent out on the 31st of March for Canada Goose. Now, we're not somebody that has a WhatsApp group. We don't send out text message alerts or anything like that. We've got a dedicated app. We've got our system in place. So whenever we have a trade alert, we have very clear, specific parameters in place now. We provide a minimum of 12 hours notice for any trade alert. Now, the reason for that is, one, I've got a code of ethics, and two, it enables you to do your own due diligence and to see whether or not it's a play that you like a lot. Now, this is another one for In-Phase Energy. This moved like 140 odd %, I think it was in the end, on the back of this alert. So that's what we do at honeystocks.com. But the really unique thing about what we do is we log and we publish every single trade alert at the end of every month. So you can see exactly what we've recommended to our members, the types of stocks. We don't trade penny stocks. We don't trade stocks that are perceived get-rich-quick schemes. We look for the best stocks in the best areas of the market that we feel like can represent the best opportunity to profit. Now, whether you profit from buying the underlying or whether you buy options, leaps, that's up to yourself how you choose to use our charting. but it's not really geared towards day trading. I think that's the first thing I want to just throw out there. I get a lot of inquiries asking if they can sign up and be better day traders, and I actually don't accept those memberships. I don't want anybody coming in and trying to use our charting for day trading, because it's just probably not going to work. So I'm very selective in obviously who I take on and have as part of the group. So if you want to come in and you obviously want to be part of this, very, very straightforward, guys. But share with you a couple of successes over the last couple of weeks. We've got Michael here. He's finally made it to 6 figures in his account. We've got Jamie, who's up 12% for the month of April. We've got Vince, who's up 9%. Again, another one here, risk to reward proposition, 150% profit on a play that they've made there. So it's very, very straightforward, guys. In the description below, or if you've come through on the website, there's a registration page. If you'd like to come in and kind of be part of what we do at honeystocks.com, just need to register your details. But like I said before, it's not going to suit you if you want to come in and try and be a better day trader with your 15 cents stop losses, etc, etc. We've got a very structured way of doing things at honeystocks.com. So if you're trying to fit trading maybe around a career or a business, and maybe you want to just kind of learn this stuff for yourself, if you've got that kind of attitude and that mindset, then I think it's some place that you might want to consider. But it starts with asking yourself if you do want to learn a new way. If you do, feel free to register your details below. But if you've stuck around to the bitter end here, I know it's taken up 35 minutes of your Sunday. I appreciate it very much, but first and foremost, guys, stay safe out there, keep to the social distancing, and hopefully we can get back to some semblance of normality very, very soon. But thank you very, very much for watching, and maybe we'll welcome you very soon. Thank you.